Okay, welcome. It's August the 20th, 2018, and we're going to be looking at some COT data today, last week's data, to see if we can get some direction for this week's trading. And I'm going to be moving quickly because I want to look at the charts, some of the charts today, just to give an idea, or see if we can sharpen it up a bit and see how that goes. Just starting with the general graph here of the assets, there's clearly some major movement in gold, euro, and commodities with these big yellow bars, which are changes in speculators' positioning. So that's a good place to start, and we can see that for each of those yellow bars, interestingly enough, there was a shift, a flip in positioning from bullish positioning for gold to now bearish positioning, and similar for the euro, which was held net bullish the previous week, and for many weeks now, flipped to the bearish positioning where short contracts outside or out. Remember, long contracts. The commodities, on the other hand, flipped to from a net bearish positioning to bullish positioning. So that's all quite significant moves, or quite significant. The moves themselves were not that significant. I mean, we have, it's really changing by a percentage or so, a couple percents. But the actual flip in positioning is sort of quite significant. And other than that, I'm not seeing we've highlighted these to just show which have had increases in positioning or decreases in positioning last week. Obviously red suggesting some weakness, and green some strength. Right now, the only bullishly held assets are the US dollar index, the S&P and the MSCI, emerging markets, and the Mexican peso. But all of these as well have had a bearish week last week. Not seeing a lot of clear classical intermarket relationships that are pointing to any cohesive risk on or risk off sort of vibe. Perhaps really more uncertainty that is being highlighted here just with the lack of cohesion. But what we will look at now is we'll zoom in on the currencies to have a better look at those. And in terms of currencies, again, we have the significant flip of the euro, the only bullish held currency, the peso, but it took a dip. And that really bearish Swiss franc and the Canadian also taking a dip lower. Some bullish strength with the pound, yen, New Zealand, Australian dollars. Some flags from open interest. Lots of interest in the pound and the New Zealand dollar. So we'll have a closer look at all those through the table view. I guess we'll start with the pound and these open interest flags, and we can see here these are the players, or the players that hold certain contracts, such as speculators with long contracts, commercials with short contracts, speculators with short contracts, and commercials with long contracts. We can see that everyone is piling on to their relative outlooks, similarly increased across the board. So unfortunately, this big bump in open interest is just that. It's open interest, but there's no relative change of someone adding on to a position and someone a short player pulling out or whatnot, which would give sort of a better idea of how the market views the pound right now. So it's having said that, though, we can see that the speculators that increased long positions by 36.64, whereas shorts increased only by 17.5%. So there's that bullish flavor to it for sure. Just unfortunately no real harmony in the signals. The other one was the New Zealand dollar that had the large open interest, and it's the same story. Open interest, and everyone is adding on to their positions, but there's no real significant signal of differences in players changing their positioning relative to one another. However, the longs versus the shorts are less demarked. It's 11.9% longs, and the shorts also adding on to their positions by 9.95%. So although that's bullish overall, it's not as dramatic as others, such as the Australian dollar. Similar, everyone adding on to positions, 5.6% open interest, but we have longs increasing by 20 and shorts increasing by only 2%. So that has a much more bullish positioning flows than the Australian dollar. What else can we look at? We're going to look at the Canadian dollar. As we said, it had weakness this week. Its open interest actually decreased. They're closing contracts, and we can see that the biggest closer is the long positions. So that would suggest the drop in positioning that we're noticing this week is because longs are closing their positions. The euro is, what do we got here? Shorts are getting on to the euro. That's fueling the euro move. The open interest is up. The biggest contributor to that are the short speculators. So rather than squeezes or closing, it's new shorts coming on board, and we'll look at that in the chart view now. This red candle here is the 14th of August. That's when that data, COT data, was released, and that showed that, as we said, bears were getting on board. Why would bears be getting on board? Well, it could have happened anywhere since the last data release, but there's some significant selling here, especially with the break of this level. That to me would suggest that this level is an important level. The sellers coming on, especially marked with changes in futures positioning, which is pretty impressive to fuel a move. You can see that that trend line where we're at right now is pretty significant from this high here, 2008, to this high, coming down to where we are, as well as this support line right here, capping all this move. This line right through here is where we're banging up now, and it is the 1.15 area. So essentially, what that's telling us is that this area is important to watch. It could be a good spot to reload. It could be well protected by those shorts that got in. They could be adding on to positions. It could be a good short area, but if it breaks, it could also be a significant move to the upside. So that's helpful to know based on that positioning. Now, the other, we'll put together the strength versus weakness right now to see if we can find some potential trades this week. Strength, we have the US dollar. We do know that, but we noted it did take a dip this week, even though it's still held at 77%. That's the US index. Mexican peso, although the only bullish currency right now, it took a dip last week as well, which is going to mean I'm going to exclude it from the strength list. right now. The strength then is in, where are we? Great Britain pound, the yen, the New Zealand dollar, the Australian dollar. Like I said, the Australian dollar had better flows than the New Zealand dollar, and the pound, although bullish move last week, was not done with any sort of cohesive positioning amongst the players, which is okay, but just means it has less conviction for me for that to be a bullish move. Weakness, we have the euro now, we have the Canadian dollar, and we have the yen. We said the Canadian dollar longs were getting out. It was a squeeze or a profit taking. We'd have to look at the chart, but that weakness we're seeing is because of longs getting out. So any pair, you could derive any combination of pairs, potential pairs from this. I'm going to, as a first level of analysis, just sort of pair currencies that have similar attributes. I find in terms of management, it makes the management more straightforward when you have pairs that react to somewhat similar circumstances. For example, you might do the euro Great Britain pound, and we'd be looking for a short of that because we have euro weakness and pound strength, which you know, are same region and Brexit drivers, same theme drivers, so it's a good pair to keep together. Then we have, of course, risk currencies that we could pair together. Whoops, how do we do this here? This is the CHF. So we have the potential CHF Japan short. Both typically move with risk trends. And then we have the COMDOLs, and it is the odd Aussie Canadian or the New Zealand Canadian as potential trades with a little more favor to the Australian dollar based on flows. So we'll just have a quick look at these in terms of a technical picture to see if they are looking worthwhile in pursuing. In terms of the euro pound short, there was some significant selling here on this move down to the 14th of August, where our data was released, where the bias at this point would still fit the picture, the weaker euro versus the pound. However, we found some support here, and we've been increasing, which wouldn't fit the euro weakness, pound strength characteristics. And we're coming up now on some significant support of this major range here, long-term range, and our COT saying to fade this. With all this buying pressure, though, you'd need a pretty good signal to look to fade that strength, even if we do have the COT flows behind us. So for me, just the technicals, I'd need a very good technical entry to fade this, and it's not very attractive to me. So I'm going to move on to the next pair, which was the short short Swiss franc Japanese yen. And the Japanese yen, now we have some selling pressure in the favor of our trend, and we're also in favor of our direction. We're also coming upon some support here, which is a pretty significant level. It's this big swing here. It's the 23.6 fib of that swing. You can see all the open and closes just along this level here, where we're about 111. And further back, you can see more support and resistance right at 111. So We do have the trend in our favor. We do have the sentiment from the COT data in our favor. We are banging on this big support level though. So we need some fuel to get through there somehow. We also, what I like about this is we have the interest differentials in our favor. The both negative interest rates with the Swissy being much more at negative 0.75 to the negative 0.1, I guess they are now. So it has a lot going for it. And there's a lot of near-term support, though. There's this quite a bit of basing here, and it's banged up upon this level for quite a bit of time. So, and then another near-term support here, and then this trend line coming from these lows here forming. So, yeah, I'd be inclined to try a short entry at some sort of technical level across these, some sort of trend line from up this way. We're actually approaching that right now, and then there's some horizontal resistance right there, right here. So there's a good potential short here on the retracement and retest again of this level. These highs have been getting a little higher, showing a little more selling or buying pressure here. So this could bounce around for a bit more, but if this breaks, it's a real nice trade, and it could, on the other hand, hold. So you have to be careful with some technical entries there, but it has a lot going in its favor. The final ones we want to look at are the COMDOLs, the Canadian New Zealand opportunities, and if we go to the weekly to get a bigger picture idea of what's happening, we can see that looks like there was some resistance or support here, probably off a trend line that I haven't drawn here, and some technical levels here that I also haven't drawn, but major buying there, and it seems to it's responded quite nicely to that. And we got a hammer pin bar sort of potentially confirming the reversal, and upper trend lines probably from this trend up here. RSI is getting overbought. Looks shaping up to be a good reversal, and similar with the Canadian dollar, or sorry, the New Zealand Canadian dollar. Similar story with the pin bar here forming. So yeah, those are definitely worthwhile watching. As I said, the difference between them technically, you'd have to dig in a little deeper there, but to me they look very similarly, and they do move in a similar manner. And there are some meeting minutes coming out tonight for the Australian dollar, and then tomorrow the retails numbers for the New Zealand dollar. But I personally, I'm going to look to get long on these two if the technical opportunity presents itself, but I'd be splitting my risk between the two of them versus the Canadian dollar, and of course we have to be careful of the Chinese trade war themes. So of those, I like the Swissy and potential reversals there, small position, but splitting the risk between the two of them. And that's what I see this week from the COT data. So hopefully that's helpful. This is only one of many ways to apply the COT data, but I find it resonates with most people, and it's the most intuitive and easy to understand. So we'll stick with this for now, and the levels were not, the signals were not ideal this week, although there was some interesting stuff. This week we get something a little better, and in terms of a clear signal. And yeah, if you have any questions, drop me a line, and hopefully this helps, and Best of luck. Thanks.